Hello, everyone. Yes, we are live here on the webinar platform and also on our YouTube channel on SME Banking TV. So welcome, everyone. My name is Olena Gryniuk. I'm the CE Director at the SME Banking Club, and I will be your host today. And today we discuss the topic why automated credit scoring is crucial for SME lending companies. My guests today are Sergii Demchuk, CEO at NovaLend, a Polish fintech specializing in SME lending, in digital SME lending, and Piotr Biegun, Chief Operating Officer at Algolytics, an IT company that helps banks and fintechs to automate business processes and facilitate data-driven decisions. So Sergii and Piotr, welcome.
Hi, nice to see you, and hello everyone.
Yeah, thank you very much for joining. Yeah, before we go to the topic, let me very shortly mention some organizational information. So we plan our webinar for 1 hour. We start from the presentations, and in the second part, we will have a Q&A session. And we invite you to type your questions in the chat whenever you have them during the presentations, and we will read all of them during the Q&A. And we are recording this webinar, so right after we finish, you will receive the link to the video and the presentations as well. All right, so let's go to our topic. I would like to share with you one slide just to give you a snapshot of the status quo of the digitalization of SME lending in the CE region. So this is data of our this year's digital SME lending study. And here you can see that 33 out of 80 banks and non-banking lenders offer to SMEs online or mobile loan applications. And as you can see here, this is mainly for sole entrepreneurs, for private entrepreneurs, and 21 financial companies offer or implemented fully digital SME lending process. And this is 26% from all the financial companies which are stating that they lend to SMEs. And so compared to the previous year, this is plus two lenders. So let's discuss during the Q&A session whether this is a big number or not. And yeah, so Sergei and Piotr, I'm passing it over to you. So let's start from your presentations, from your experience of in digitalization and also in SME lending, and then let's have a discussion. You're welcome.
Okay, so we start with my slides, and I will present NovaLend. This is quite young Polish lender. So we started our business less than 2 years ago. And we did it fully digitally from the very beginning, since we were very young and we had a lot of possibilities on the market. So we decided to go only online. And yeah, let me present NovaLend, what we have done so far and how we are going on. Yeah, so quick overview of our company. So we provide business loans for sole entrepreneurs and companies, LLCs, up to 100,000 euro. It's a very, we consider it like only working capital financing, short term, up to 1 year. We started in March 2023, and for this quite short period, we managed to disburse 250 loans, 7 million euro. You can see here average loan 25,000. We have quite low level of default, 2.5%. And in the first year, we focused on developing our decision-making model, hiring and training core team. Well, and actually what we managed to do is to make our business profitable from the first year. Actually, that's partially due to the business model we choose and the model of partnership with guys like Algolytics and some other partners with whom we actually established from the very beginning the model of cooperation, not to invest a lot into development of our own soft, our scoring model, etc. But we choose to cooperate. And we will talk about this a bit later. Maybe a few words about team and myself. I have background in banking, SME lending, and non-banking financing. I started my career in ProCredit Bank almost 20 years ago. I see here in chat there are some people whom I personally know, with whom I even worked in Ukraine some time ago. So great to see some familiar names. About my team, at this moment we have 10 employees, and this is enough actually to serve our existing portfolio and to scale our portfolio 2-3 times, maybe even more. Because what we built from the very beginning is very with high automatic level. So we don't need too many loan officers, let's say, to process those applications that we have at this moment. So if we move further, like how we did actually analysis in the past, like in this ProCredit, or I think most of participants actually did the same in the past. Yeah. So what we did to analyze the customer, we had to go to the field to analyze the business of the customer, to see, I don't know, to talk with the business owner, like maybe sometimes visit the house, etc., to check the copy books, like on these slides you can see now. Yes, and the question is it still the option, the only option that we have? Do you think we still have to do the same field visit, or we can process with the loan application in different way? How we actually solve this problem in NovaLend, we based on the approach that everyone nowadays is leaving digital footprints about ourselves as a private individuals and about our companies or about any LLC or sole entrepreneurship. And having this in mind, we just created our solution that allows us to analyze all the data online and not to go to the client, not to visit the client on his place of business. So client register on NovaLend portal through personal page, give us access to check credit history bureau of the company and the owners of the company. We check also around 10 different databases. And we, through open banking, we parse bank statement account of the customer for the last 12 months. And based on all this information, we built our scoring, and we give decision to the customer. Customer accept, sign remotely, and receive money within 24 hours. So that's actually the solution that NovaLend created. And here is our partnership with Algolytics happened. Yeah, we together with Algolytics, we developed the decision-making model, how to process this data, which we collected, and how to make this process much faster. And I will show about this a bit later. Yeah, so just next, what I want to show, how easy nowadays online process for the customer to onboard the customer should look like, in our view. Yeah. So, and even answering this question that Olena raised in the very beginning, I think this should be already must have, like for not only 33% Olena mentioned, yeah, the companies have online process. I think nowadays at least application should be online, like for 100% of companies. Yeah. And how it looks in our company. So onboarding of the customer is just, we ask only tax ID number of the company, email address, phone, and create password, give some, according to GDPR, some consents. And after that, very quick application for the loan and providing some data is needed. So you can see here is only based on this tax ID number, we can collect all information we need, which is possible to edit if customer needs that, or he can just proceed to provide additional data. Like we verify email, phone number, data of representative, So you can see actually on here like how many fields or how many clicks the customer has to do, which is in our view not so many. After that, he provides information about loan that he needs. And the last step, he has to submit bank statement, either through open banking, so he can log in into his bank account and give us access, and we parse this data, or he can provide PDF bank statements for the last 12 months. Yeah, and after that, that's it. All information that we need, we receive from the customer, we can process that and give the customer decision. So in our system, in our CRM and the loan management system, we have like sales funnel, like very typical sales funnel, I would say, where we can see on which stage each customer is, and we make sure that we push customer to analysis, to decision making, and to offer acceptation, and after that to the signing. So it's also most of all process automatized. So in back office, we see when customer submits something, we see it on each stage. If it goes further or it's stuck somewhere, so we can call the customer and help him to proceed with the loan application. Yeah. So how we all the data that we collected actually from the customer, we processed and then put in very convenient Excel for us. Most of this data submitted automatically, but it gives possibility to loan officer, let's say, to check, to make some notes for themselves, and I don't know, for conversation with the customer, because we still have this verification, short verification call with the customer. They can check, verify, double check some information, and then proceed with the application. Yeah, some of nice feature that we implemented, Piotr will show a bit more about this, that we can build affiliation structure of the company or of the owners, and we can see how, for example, client historically was affiliated with other companies. So this is the same client, but if you put like historical overview, you can see that historically this client was connected with some other companies, and you can see affiliation by address, by phone, etc., etc. And also you will see if, for example, something is in yellow or in red color, that something is wrong with these companies. So it's easier for us to see alerts. And we also have special list of alerts, high alert, mid alert, low alert, which also help us to make decision. Yeah, so that's one part. Another very nice part that we managed to build, which is like significantly improve our lives, now loan officers' lives, that automatically build cash flow based on parsed bank account statement. And here we can see the cleared revenue of the customer. We can see bailiffs, let's say other loans, which we, for example, we can see if the loans that are stated in credit history bureau are repaid or not. Yeah, so that allows us to process applications much faster. And here we can actually move to maybe the last slide that I prepared, that implementation of collaboration with Algolytics improved our process significantly. So before we implemented our, let's say, set of rules and automatization, it took loan officer around 3 hours to process the loan application. It was, once again, it was from the very beginning, it was done everything online, but when a loan officer had to go to credit history check or to databases checks, to collect all the data manually, it took a lot of time, and there was always a possibility to make mistake. Yeah, with implementation of our credit scorecard, alert card, and all this level automation that I mentioned, we decreased processing time at least 3 times, and of course we improved quality, because when human eyes cannot control so many parameters like a machine can. Yeah, so when we have, let's say, 20 parameters or 20 alerts different, which is one is important, one is not important, for the person, it's really hard to process. But for machine, there is no problem with that. Yeah, so I'm pretty happy with our collaboration, happy to share this experience. I think this is just the beginning of what we've done so far with Algolytics, and we will keep moving on with improving our credit score and some other processes. We have a lot of thoughts with Piotr and both our teams, how to improve our collaboration and where also to use data engineering and data science, not only in aspect of credit score decision making, but in some other aspects as well. Yeah, we can talk about this probably later. Yeah. So thank you, Piotr, for our collaboration. Thank you, Olena, for giving this opportunity to present what we've done so far.
Thank you very much for sharing.
Yeah. And we can move on probably.
Yeah. We do have one question, which I think you can answer, and also Piotr will mention it in his presentation. A question from Emil about that you mentioned 10 different databases. Could you give some examples?
I have this in the presentation, so I could explain it.
Okay.
Explain it more. Yeah.
All right. So let's move to the presentation then.
Yeah. All right. Okay. So my time. So thanks for having me today and for warm words from your side, Sergii. So I will try to comment or expand a little bit what Sergii show you today and show you where you should be looking for data and what you should have in mind if you want to build automated credit scoring process. So a quick intro. So as Algolytics, we are offering a comprehensive data science platform that helps to automate processes. Business processes with data, with machine learning, with data science or AI. And we have, and on top of the platform, we are building solutions for credit scoring. Yeah. So what we'll be telling you or sharing and what we built, it's our more than 20 years experience in building such solutions, starting with telcos, financial institutions like banks, but also for leasing, factoring, and customer and consumer and B2B loans, and also doing similar scorings for other companies probably not affiliated with financial services. And in our eyes, right now there is only one way to do lending transformation for SMEs, and there are two key factors: access to data and use of machine learning and artificial intelligence. There are main drivers that helps you to automate very specific processes you already have or you're running from in your organization. So, but there is one issue where when you need to do quickly adjust to the changing world. So if you have a system that it's complicated, it's based on maybe microservices or multiple dedicated apps that handles your credit scoring processes. That means if you want to quickly do a change, it takes just a lot of time. So you are moving slower. And in our experience, what you should be looking, it's a platform that helps you to integrate this whole credit scoring process. And it's a little bit more than decision engines, It should be a full-blown machine learning MLOps platform that helps you to not only to integrate data, do the credit scoring, but also to run additional solutions on top of that. As Sergii mentioned, that we are also looking for other ways to improve the processes. So we are using the same data to optimize the marketing, sales processes, and also other processes in the future. So one place where you collect all data and you use data science, machine learning to automate and improve your processes. Yeah. So on top of the platform we have, it's like what we are building, and we also have customers that are using. They have different types of businesses. So we built one common process that is able to handle customers, different types, and in different channels. That means with different data that are able to automate the credit scoring processes for them, collecting data from internal, external sources, external providers, public sources, and also things like behavioral biometrics and geoscoring, which are later used to do the risk assessment using both machine learning and verification rules that Sergei mentioned before. And based on that, we have decision scenario builder, which helps you to adjust the scoring process to the business process you have. And in the end, it's not just a simple decision, yes or no. It's a decision that you could act on. So you have, of course, approval, you have, of course, denials, but also there is alternative offer. Yeah. So because we work with different businesses, you have different products. Sometimes the things that your customer is asking for doesn't mean that they will get it, but you could always have something else in mind you could offer to in your process. Yeah. So answering the question, what kind of sources we are using? So it's a little bit more than 10. If you look on our integration, we are reaching probably we have ability to reach for more than 50 different sources. Yeah. Starting with public registries. And I think this is a huge differentiation on a Polish market, that we could get a lot of data from public registries regarding Polish companies, both and also for solopreneurs. Yeah. And later on, we are extending those data with external and internal data. So if you are using some kind of credit bureau provider, or do you have open banking and bank transactions in your process, or you have your own data on which you could build model, those data could be ensembled in the scoring model. And finally, you will get a probability of default, credit limit, rating, list of warnings, and also the source documents for further improvements in the process. And it's crucial to keep those data from the scoring process, because some of the data some data change during the time. So if you don't save those data, you won't be able to build dedicated scoring processes on those data you already collected. Yeah. So just to show you what kind of data, because it's like getting financial information about the beneficiaries, people that are representing the company. This is something you could get from different sources in different countries. But I encourage you to look into other public registries that are not often used in the scoring process. For example, in Poland, we have a registry of national registry of debtors. So our data shows if someone is in the registry, the default risk grows enormously. Yeah. So finding data, using data you have, it's crucial to improve your scoring process. And also our data are showing that not all of those information are visible in credit bureaus, because some of the information doesn't go there. It's just, not everyone is reporting all bad debts. Yeah. Other things we also use here in Poland as an interesting source is electronic a document registry for a company court. So you could find key information about unsuccessful enforcement, and also those kind of information. Probably it's hard to use in the scoring process, but it's very useful if you want to build some kind of warnings. So you could decide if the specific information is makes impact on your decision. So what I think it's important here to mention is that those registries are public, but it's not easy to get data from them. And if you have a larger amounts of applications in the process, finding those information is just challenging, and it's not easy to do. So therefore, you need technology that helps you to get those data. And also any kind of information like summary of opinions in the internet about the company, or information about debt in the debt exchange, also collected automatically, will help to make you a better decisions. And based on those data, you could build very sophisticated and complex affiliation charts. So I will show you in a moment how big the chart is, and this is Polish investment fund, so it's a public entity, government entity. But basically, it shows you how complex data are visible in the public registries and how they could impact your scoring process. Yeah, and of course the standards things. It's a credit scoring card, so you will get some kind of rating, credit limit, and some kind of variables that will give you points. But probably what is also useful, especially if you are working with non-banking customers, it's a list of alerts explaining the decision. Yeah, so you could get those notifications that there is something you should look as a credit manager, and you could decide if it's a risk you want to take or not. Yeah. So in Poland, based on public data, we have a generic scoring models that are very efficient. So basically, just on the data available in public registries, we are able to score two things, like payment risk scoring. So the probability of missing the payment in 90 days DPD, and financial scoring for companies that are reporting data to the registries in Poland. So based on those data, you know if someone is a good customer for you or not. And if you add additional data from the process, you'll be able to reduce the risk you want to reduce the risk of your decisions. Yeah. So in our experience, building a system should look something like that you have data from the application, and later you have a model and your rules that make the scoring. So you adjust the credit limit and your rating according to the profile of the risk you are taking. And if the risk is not acceptable, you are declining those customers. And if the risk is in your reach, you could decide to automate some decisions or go for additional manual review. So in our experience, the biggest uplift in your process is that you automate those manual processes and give your team a right decisions to take right information to take decisions. So they don't waste time on gathering the information. They just focus on the assessment. Yeah, and also in our experience, using any kind of ensembles in your machine learning models help you to be ready to digest data from other sources. So it works both if you have some kind of old legacy system, if you could add additional model data from additional sources, it will improve quality of your scoring without need of changing existing systems. Yeah. So basically, you could influence the decisions you already having without heavy changes in your systems. Yeah. But to do this, you need the right tools. So you need to have a platform that helps you to do the all heavy lifting from the technical side. So you could focus on building access to the data and using those data in the scoring process and scoring decisions. Yeah. So if your team spends a lot of time on maintaining credit scoring infrastructure, that means they are not working on improving your models. Yeah. And as Sergei mentioned, we have this a very big graph. So here there is Polish investment fund. So just to show you how big it is, it's just a big net, and every company in this graph is automatically scored thanks to the access to the data we have, and you could easily filter those data. So if you want to reduce complexity, you could reduce connections through the address, through the phones, persons. So you will see everything that we could help you to take a decision. And as you see, we have companies that have some kind of information, probably some kind of alerts, and just browsing this, you will understand what is happening and if this customer it's someone you should do business with. Yeah. So that's it from my side. So if you have any questions, we are happy to answer them with Sergei and Olena.
Thank you very much, Piotr. Yes, we do have questions. I will read questions now I have from Lilia. Thank you very much. So the first one, I guess you answered already, Piotr, but I will read it. So is the official financial data impact scoring results official annual report? Is it representative parameter? So you mentioned, Piotr, that yes, we can build based.
Yes, and you could do different approaches here. So first thing is data from official registries like financial data, but also you could use data from current operations. So we also have this implemented in the process. So you have this VAT reports, and you could also get partial financial data, yeah, and do the scoring. Yeah. So basically, you will see what kind of situation is the company, what is the current situation of the company. Yeah.
Mm-hmm. And the second question from Lilia is about the process of decision making. Are manual checks done in 100% of applications? Is verification call done in 100% of application, no matter which amount is required or profile of the customer? Sergei, maybe this is here. What do you?
Well, it's actually interesting. Like my idea at the beginning was that we will not call customer at all. Yeah, but probably my old school background didn't allow me to implement it till now. Yeah. So at this moment, if we proceed with the loan application, we have this verification call to the customer to talk, because as I mentioned, we have average amount 25,000 euro. Yeah, so I'm not ready at this moment to disburse this amount without, let's say, conversation. But I think in the future, of course, we will implement automatic decision making. Even now, we already base our decision on this alert card and scorecard. And in the future, we will definitely do some loans without conversation with the customer. Yeah, but at this moment, to be honest, I prefer to do, because it gives me a lot of information. It's like every time I receive this feedback, and we can improve the process. Because for me, this is the crucial to build and calibrate the system. Yeah. So that's why now we have decision making. Let's say semi-manual based on all those parameters. As soon as we catch any default, which we definitely have, we immediately write we have a common chat with Algolytics. Hey, let's change the rule, let's improve it, and so on and so forth. Yeah.
Mm-hmm.
On our side experience is that it all depends from the limit or the amount you are giving, because if there is low limit, low amount, and the risk is low, you could automate the processes. Yeah. So if you work with telecoms, the whole process is automated. Yeah.
Mm-hmm.
But of course, you need to remember that there need to be a path that someone could ask you why you declined me. So you need all those data, have access to all those data to explain the decision. And for B2B companies and larger amounts, I think that the person even calling someone in the decision process is something that you should think of. But it's like, those people are responsible for assessing the companies. They have a lot of experience. Yeah. So they will see data, they will talk with someone, and they could find informations that are not visible at the first sight in data, even if there is automated process. Yeah. So I think that keeping this semi-manual for larger amounts in B2B is something that will be always happening.
Mm-hmm. Mm-hmm. Yeah. So now I have my questions to you, a lot of them, but we have time for all the questions. So if you have ones, please type your questions. We will read all of them. We have time actually for a Q&A session right now. My first question to you will be the following. I want to get back to the data that I showed at the beginning of the webinar about the status quo and the level of digitalization in the CE region, in the SME lending. And yes, I totally agree, Sergei, with your comments that like now 100% of the applications should be available online or mobile for SMEs, at least these parts of the process. Yeah, and regarding the fully automated or fully digitalized process, we have 26%, which actually, is it a big number in your opinion? And so let's start with that. What do you think?
No, in my opinion, this is small number. Yeah. Consider, for example, if we as each company has private individuals behind, right? And for example, I think each of us, we have at least several mobile bankings, even as a private individual. Yeah. If I need I don't know, any type of financial services at this moment as a private individual, I do it online. Yeah. So as I'm a small entrepreneur, usually I do my own business. Why should I, as an entrepreneur, do something offline if I do personally things online? Everybody has Revolut at this moment, or 2-3 other mobile bank applications, right? We can send money to each other at this moment in a second. Yeah. And then why, as an entrepreneur, I have to go to bank or non-banking institution to submit application in paper? This is for me something like yesterday, the day before yesterday, even like this.
Yeah, so SMEs started to expect from the banks the same, especially micros, the same experience that they have as private individuals. And actually, we can say that this 26% of the financial organizations are really targeting SME segment, SME market, but also among them, if we see into the detail of the terms of the loans that they publish on their websites and ask from small businesses, we do see that credit policies are restricted, at least in the banks. So non-banking lenders are more open to finance this segment of customers, while banks really require a perfect financial situation, even for an overdraft. So have, for example, a net profit for the previous financial year. So even if the process is digital, they do expect the customer to be perfect after all the crisis that we passed through, and SMEs, of course, suffered the most of them. And Piotr, maybe with this question, I want to address firstly you. Do you think that if the banks would apply more data-driven approaches, you both actually showed, and Sergei, I liked your statistic that the default rate decreased twice, right, after using the automated scoring. Does it mean, or could we say or suppose that the banks could become more or less restricted towards SME lending?
So there are two things we should take into the account. First is that the SME segment most of the time is unmanaged. So there is a lot of key account managers or bank employees that manages a lot of companies. So this is very hard to do personalized approach if you have few hundred customers under you. So without the automatization, those companies cannot grow. It's like someone needs to go to the bank and they need to ask and go through the painful process. And in Poland, it's a little bit different than in the rest of the region. So for example, you could take the same loan as a private person, solopreneur, and even for some companies, commercial companies, there are processes automated. Even if if you need to upload those documents because this is the regulation, the process of gathering this data is automated. So sometimes you need to comply with the law, but making it easier is something you should do always. And if there are countries that you cannot automate the decisioning, so that's fine. But make it easier for people to get your financing. And also, it's like in Poland, we see a lot of situations that a private person get financing to support the business. So because the access to the financing is a little bit harder. So banks are in a better way. Banks are better because they have easier situation because they have access to transfers. They see the actual transactions, they see the scale, so they could have a pre-limit ready, and that's the way you are getting there. But to do this, you need to have a technology. You need to invest in technology to make it easier.
And speaking of the data-driven decisions, we have a question from Manuel. Which is the main sources of external data, and how to ensure it is trustworthy?
So I think it depends on the country, and the differences are there. So in Poland, the whole process, it's like the public data, they are very reliable. Of course, there could be some errors, but basically, if someone doesn't upload the real data, they have issues. So you need to have a legal situation that ensures that people are reporting a true data to the registries. And if the legal framework is working, you have trustworthy data. But for other situations, I think the only thing you could do is just to have multiple data sources and verify what is happening. So one thing that could be useful from the anti-fraud perspective is like if you have data from different sources and they are different, that means that someone is working on adjusting them to the process. So one thing in Poland, we have multiple small banks, and if you and which are not connected to through the open banking, and those people are using those banks are uploading bank statements that are not signed digitally. Yeah, so we don't know if those data are really true. Yeah, but there are data science methods that helps you to verify if the data there are they are correct. Yeah, if they are in the right order. Yeah, so it's not easy, but the technology could help you identify fraudulent patterns. Yeah.
We have question from Kevin. Is the transaction size, say B2B facilities, over $3 million, where companies might be less willing to complete an online application, requiring you to handle data input or offer a more high-touch customer experience? I think this is not an SME case.
I think this is not a SME case. If someone can provide 3 million facility, you can, I don't know, to go to this customer to live in his place and collect all the data and give him offline customer experience. This is not.
Our experience above some company size, there is one big change. So the representative and the owner standing doesn't have big influence on the company. Yeah, so it will differ from market to market. Yeah, but basically the rule is that the smaller company is, the bigger standing of the representative or the owner, co-owner, the impact is bigger, yeah, of the private standing, yeah. So the things are changing, and I know it's hard to get access to all those information for the larger companies, but collecting data, making the process online, because still people need to fill out the form. Yeah. It could be done online. So we know that in Poland are banks that are going through this way, and it's possible to handle even larger companies through the online processes, because there is always someone there. And of course, there are additional security measures you need to take, like if someone is really can really represent the company. So yeah, but this is something you could build and you could handle.
I can add here, actually, there are many things that can be and should be implemented in banks as well. For example, as I showed, we enter only tax ID number, NIP, this tax number, and you can easily upload all information about representatives, name of the company. So you don't need to type long name of the company, address, etc., etc. And there are still many bank applications when you have to enter all this data. And for myself, like being a user, like it always drives me crazy. Why I need to provide all this data? When even if I put my tax ID number in internet, I immediately see all the information about the company. So it's all available data. Why you need from me to complete all this data? And also, like, if I can access information online, NovaLend can access information about the customer online, because we studied our competitors, for example, and I don't understand why they ask customer to provide all those questionnaires for 10 pages, sometimes even to handwriting and then scan it. No, so it's
So if the data is available on the market, don't ask the customers to fill it manually, because then it's your task to embed it into your process, because customers will just skip the difficult process. I have a question for you. Do you have any recommendations on the number of SME customers, or maybe SME portfolio, that when such an automation makes sense?
From my side, maybe I say from the side, we started from the very beginning, from zero, I would say. So actually, we decided we started everything like MVP, minimum viable product. So created landing page, we created product. We said, hey, let's see if this product actually needed to the market. And once we received first, let's say 100 loan applications, and we dispersed maybe 20 of them, I already realized that we will be stuck because we touched just this little part of the market if we make it manually. So, and I think, Piotr, we met maybe after 3 months I started the company.
In May last year.
So it was less than 6 months, definitely less than 6 months from the first loan disbursed to the moment we signed with Algolytics the agreement that we need to implement automation process. So for me, it was obviously we need to do manually first. This is a good rule. Like if you do the same task repeatedly several times, at least a few times, then it's time to automatize. Then the question only the budget for that. And if we move to this question, then I would say that the cooperation that we choose, a kind of subscription-based model, or to not to develop everything in-house, this is the way where you can save a lot of money and to rely on knowledge of guys like Algolytics. They have 20 years of experience in data engineering, in scoring, and working with big customers, with big data. So I don't need to hire my own IT team to create for them task. I have my own knowledge about which customer I want to have, how to serve him better, how to make decision. Yeah. So for me, most important to find the customer, to acquire the customer, and to process with decision making and disbursement. This is my core. All the rest, I prefer to outsource or to cooperate. So of course, what Algolytics never or any other vendor or partner will not give you like silver bullet. Yeah. So will not give you all scoring. You need to create the rules as a lending company because you take the risk. But they can help you with the technologies. That's their strength, and that's it. That you cannot outsource decision making, in my opinion, but you can outsource the automatization and creation this scoring model. What they did in 3-4 months, that was actually the time when we started, and the first production version happened after 3 or 4 months. So I would never do it I would hire only IT guys after 3 months of recruitment process. And that's
I think the other things you should look for is the size of the loans. If the loans are large, missing, one loan or losing one loan means that the whole system will repay. Yeah. Another thing is that if you have constant flow of leads or applications, and it also is a good place to start. Yeah, if you have like a small, like few, maybe a month, maybe it doesn't make sense. But if it's a few per day, it starts to make a sense because you don't have time to process them all carefully. Yeah.
Another question from Lilia: is disbursement process automated or also involves manual checks? This is to you.
No, in our case, yeah, it involves manual checks when it's signed. So we just check all information, and we keep this 4I principle. But generation of agreements, of course, it's automatically done. So we generate agreements, we sign it with also external provider for signatures.
Yeah.
In each, at least in European Union, in each country, you have such provider with whom you can actually sign through whom you can sign documents. So that we have it. Yes, and then we just need to check. At this moment, actually, referring to the last message from Piotr, I think at this moment we can keep it manual, not the process that we need to automatize.
And maybe to wrap up today's webinar, a question to both of you. So after your mutual implementation, which is 3 months, I think this is very short period of time, which is wow. Congratulations. What are your lessons learned, and what are your recommendations to the banks and to other financial organizations from what to start and how to integrate or implement this automated process effectively?
I can start then, maybe, Piotr, if you don't mind. I think just I would say work with your own laziness and inertia. That's the first. For companies who are already many years in the market, it's really hard to decide, and also to change the approach because banks, especially banks, they always want to have something in-house.
Yeah.
And that's, I think, the biggest issue for banks and big organizations, that they consider that we will do everything
by ourselves.
Yeah. So that's, I would say, give it a try. Just try with some small process, because that you can everything built on like these microservices, right? So you can try with one part, then another one, and try with something to outsource and to integrate it into your ecosystem, and then you will see how to move further.
Okay. And from my side, I think you need to be open and flexible. Is that, yes, you have a process in place, yes, it's working, but if you are not open and flexible to change it, it will be looking the same for the next few years. And the difference between smaller companies, new companies on the market, is that they innovate. They are open to do changes, and they know that they need to change. In larger organizations, from our experience, changes just taking time. I know there are regulations, that I know that there is not everything that we are doing with smaller companies is possible there, but still you could use everything those companies are smaller companies are doing in a larger organization, but you need to adjust those to your perspective. But it requires a right approach on your side, and you just need to want to change things. Without it, it's like it doesn't make sense.
Yeah. All right. Thank you very much. Thank you very much, Piotr and Sergei, for your contribution.
Thank you.
Thank you very much to all our attendees for staying till the very end and being so active, asking so many questions. Thank you very much. And then see you in November, on November 15th at our C24 SME Banking Conference. Sergei and Piotr, you in person in Vienna, and some of the attendees also in Vienna. And the rest of you we invite to join online. So see you next month. Thank you very much, and goodbye.
Thank you. Bye-bye.
Bye.